Brookfield just reported its earnings, and I'm sure you all know by now that this is the largest stock in my portfolio. It is also having a nice green day after it reported its earnings, and today I want to go through the numbers and share what my thoughts are on the stock now. But first, I want to re-highlight what Brookfield's business is and what they actually do, as I think many people don't even know. To put it as simply as possible, Brookfield owns, operates, and builds the backbone of the global economy. For example, in their renewables business, they are building one of the largest hydrogen projects in Canada. They own Westinghouse, which is considered to be one of the best nuclear companies in the world. They own hydro dams, which power millions of homes across North America. They also have solar, wind, and many other renewable energy assets that the economy relies on. They also own railroads, data centers in Latin America. They connect homes in the UK to the energy grid, operate energy infrastructure across Canada, and recently, they purchased Colonial Pipeline, which is America's largest pipeline by volume. It delivers more than 100 million gallons of fuel every single day. Over 50 million Americans, 45 military installations, 28 refineries, 8 airports, and 4 terminals rely on this pipeline daily. They have so many more assets too, but this shows you the type of assets that Brookfield owns and operates. When they say they build the backbone of the global economy, they mean it. These assets are absolutely critical to the economy and will continue to produce cash flows through all economic environments for decades to come. Additionally, Brookfield is a world-renowned capital allocator and manager with over $1 trillion in assets under management now. Hedge funds, sovereign wealth funds, and high net worth individuals give Brookfield money to allocate and invest for them. Brookfield's reputation, size, and track record give it extremely unique investment opportunities too. For example, Brookfield has deals with governments and some of the best companies in the world. Last year, they signed a 10.5 gigawatt power deal with Microsoft, which was the single largest corporate power purchase agreement ever by a factor of 8x. Intel also signed a $30 billion financing deal with Brookfield to finance the build-out of its chip factories in Arizona. Brookfield was chosen by France to lead a €20 billion deal to build out France's data centers, which also makes Brookfield one of Europe's largest data centers developers now. When SoftBank announced its investments into the United States economy and Stargate, it reached out to Brookfield to be one of the companies to help finance all of these investments. So you can clearly see that world-renowned organizations of the highest quality work with Brookfield, and governments choose the company as a partner to build out their infrastructure. And think about it, if you're an investor, hedge fund, or sovereign wealth fund with billions of dollars of dry capital that you want to invest, then you probably want to give it to a business like Brookfield that has these unique relationships and a track record of absolutely incredible execution. These relationships, reputation, and historical track record are Brookfield's moat, and this is how they continue to attract hundreds of billions of dollars of capital and invest it wisely. So now let's get into the earnings results from the business, and as always, I took screenshots of all of the highlights that I found. So right here we can see that Brookfield Corporation reports a 27% increase in distributable earnings to $1.5 billion. They also repurchased $850 million worth of shares so far year to date in 2025, and their deployable capital increased to a record of $165 billion now. So right at face value, just by reading the headlines, we can see that this was a pretty strong earnings report. But further on, the president of Brookfield Corporation said, "Our business performed well in the first quarter, with earnings 30% higher than the prior year, supported by continued momentum across our core operations. Our asset management business had strong inflows of $25 billion during the first quarter. Our operating businesses continue to generate resilient cash flows, and our wealth solutions business delivered robust growth. In spite of increased market volatility, the outlook for our business continues to be strong, and our focus remains unchanged to deliver 15% plus returns to our shareholders over the long term." Then down here in this table, we can see that distributable earnings before realizations were $1.3 billion, and DE before realizations increased by about 30% year over year. Now, distributable earnings on a total basis, which does include realized gains from investments, was $1.55 billion, which was up 27% year over year. So Brookfield's distributable earnings growth is accelerating. which is exactly what the company said would happen. If you have been watching my channel for some time, then you know that Brookfield Corporation put out their investor presentation in September of 2024, and they projected 21 to 25% annual distributable earnings growth. Well, in the first quarter, they just beat that, and they saw growth of 27%. So yeah, once again, their earnings is actually accelerating right now, which is good to see. So now let's move on to the next screenshot, and the underlined segments here is from the asset management business, and this says, fee-related earnings were a record of $698 million, representing growth of 26% compared to the prior year quarter. This was driven by a 20% increase in fee-bearing capital over the last 12 months to $549 billion. And once again, total inflows were $25 billion in the first quarter. We closed our flagship opportunistic credit fund strategy at $16 billion. We are set to have by far our largest pool of capital for opportunistic real estate to date. So while the macro is a little bit uncertain, it seems like Brookfield doesn't really care, and they're continuing to set records across their business, even for capital raising. And what's interesting to me is they just raised their largest real estate fund ever in the company history. And this is interesting to me because investors in general haven't been too bullish on real estate over the past little while, but it doesn't really seem like Brookfield's clients and their customers really care, and they still raised a massive new fund. Now, moving on to their wealth solutions business, this says distributable operating earnings were $430 million in the quarter and $1.5 billion over the last 12 months. So the wealth solutions business, or the insurance business, is continuing to grow extremely well, as we're going to continue seeing here. But this next screenshot is on the operating businesses, and this says distributable earnings were $426 million in the quarter and $1.7 billion over the past year. Our core real estate portfolio continues to grow its same-store net operating income, delivering a 3% increase over the prior year. In our North American residential business, we generated approximately $640 million of proceeds from the sale of the master plan communities as we execute on our plan to shift the business to a more capital-light model. Now, I shared this in my recent Brookfield videos, but their company is actually planning on selling off a lot of its real estate over the next 5 years. It kind of has this, what they call transitional real estate portfolio, where they build residential communities and maybe buy some distressed real estate and then fix it up and try and flip it. But it's a very capital intensive business. And overall, they're just not really wanting to be in this business anymore. So they're actually projecting to sell off their entire transitional development real estate portfolio over the next 5 years, and they're continuing to execute on that plan. You may also see some bears point out that Brookfield's property group's net operating income as a whole is declining, but that's partly because they're selling off their portfolio. And since they have less assets, the only natural course is that their net operating income from that segment of the business is going to go down. And I don't really see this as a problem personally, because they're rotating that capital into higher return investments, and it's clearly paying off because the earnings are growing substantially. But let's move on to the monetization activity, where they say, during the quarter, we successfully closed approximately $22 billion of asset sales across the business. Substantially all sales were completed at prices in line or above carrying values. Now, the reason that this is important, and I underlined it, is because as a Brookfield shareholder, I have seen so many articles come out over the past 3 years during my time holding the stock that the company is overinflating its assets on the balance sheet. But whenever Brookfield actually sells those assets, they get the value that they quote them at on the balance sheet, if not higher. So I think the bear thesis or theory that Brookfield is inflating its assets on the balance sheet is just false, and they continue to prove this correct. Continuing on, they said total accumulated unrealized carried interest was $11.6 billion, representing an increase of 14%. As we execute on our monetization pipeline, we expect to realize much of this into income over the next 5 years. So unrealized carried interest is essentially unrealized gains on investments, and these unrealized gains are now sitting at $11.6 billion, up 14% year over year, and over the next 5 years, Brookfield is expecting to sell off these investments and realize that $11.6 billion of earnings. This is also the realized carried interest figure that we see on their financial statements and in their reports. The realized carried figure is them selling off their assets. And again, they have that $11.6 billion of current unrealized gains, And over time, they're going to realize those, and that is what is volatile in the earnings reports. But let's move on to the next screenshot now. And here we can see that the asset management business delivered $684 million of earnings in the quarter, and the wealth solutions business generated $430 million. This is up from $273 million last year, which is growth of 58% year over year. So the wealth solutions business over at Brookfield is absolutely exploding. They're doing an incredible job growing this business. And as we're going to see later on in the video, by 2029, Brookfield is expecting this business to generate almost $5 billion in annual earnings, which is about how much the entire company generates today. So within the next 5 years, they're basically expecting just the wealth solutions business to double the company's entire earnings. That's how much growth is left in this business and how much growth they are expecting from it over the short term. And it is great to see that this business is continuing to grow by roughly 60% year over year. It's actually becoming one of the largest earnings contributors to the entire company. Now, the next underlying segment here is the Brookfield Property Group, because distributable earnings from Brookfield Property Group came in at $215 billion and increased by roughly 30% year over year. In total, the operating businesses generated $426 million of earnings, and Brookfield as a whole generated distributable earnings before realizations of that $1.3 billion, up 30%. Then we can see that they had realized carried interest of about $190 million, which increased total earnings on the quarter to about $1.55 billion, and is up 27% year over year. This is all fantastic to see. Moving on to the next screenshot, what I like to do every quarter is just show Brookfield's distributable earnings before realizations, and I outline these boxes with a red outline because this is how much operating earnings Brookfield's business generates. The realized carried interest, the light blue boxes that you see on top, are them realizing gains on investments, and that's just a much more volatile figure. So to put it simply, the red boxes here are the company's actual operating earnings, and what we can see is that they are very clearly growing. In 2025 now, in the trailing 12 months, they're sitting at $5.2 billion. And in the trailing 12 months, that's $3.26 per share. So that's how much earnings the business is generating, and this number is projected to continue growing by over 20% over the next 5 years. Moving on to the next screenshot, this one is the infamous confusing table of all of Brookfield's different assets. But right away, we can see that Brookfield Corporation's ownership of BAM is now sitting at about $57 billion as of the end of the quarter. And these shares are publicly traded, by the way. So if you go to the BAM ticker on Yahoo Finance or on Stock Unlock or anywhere, Brookfield Corporation owns about 1.2 billion shares of that business in the public market. So this value right here, you can calculate at any time. And at the end of the quarter, it was sitting at almost $57 billion. Then we have accumulated unrealized carried interest of about $7 billion after paying taxes and all the fees, direct investments of about $11.4 billion. The insurance business is now valued at around $25 billion. All of the operating businesses are valued at around $41.5 billion. Brookfield has corporate debt of about $19 billion, which gives the company a net capital value or net asset value of around $150 billion today. On a per share basis, this is $94 US per share. And this is what the company believes its net asset value or intrinsic value is that $94 US per share. I believe this is still about 60 to 70% above where the stock is currently trading. And this is why Brookfield is continuing to buy back its shares, because it does believe that its stock is undervalued, and I do agree. Now, I personally don't love to take a look at the net asset value of the business and value it that way. What I like to do is take a look at its price to cash flows or price to distributable earnings, and also the company's expectations for future earnings growth. And later on in this video, we will take a look at those metrics. But now let's move on to the highlights from the shareholder letter, which is written by Bruce Flatt. And there is so much gold in this shareholder letter. It was 9 pages long. I only have a couple of snippets from it, but I would recommend that everyone go and read it, even if you're not an investor in Brookfield, because it's always a masterclass on investing, thinking long-term, zooming out, and not getting so caught up in the day-to-day volatility and noise of the markets. So let's take a look at what Bruce had to write this time. While the geopolitical environment is more uncertain than 3 months ago, our focus remains the same. Find great businesses to acquire, buy them when we can acquire for value, and operate them well once we own them. History has proven through all economic conditions that owning great businesses for long periods of time is the cornerstone of wealth creation. In typical Charlie Munger fashion, I have nothing to add. Moving on to the next screenshot. Global markets were volatile, our business strong. We started the year with positive economic momentum. To date, growth and labor market data have remained resilient, but changes in US trade policy have created uncertainty in capital markets. While our businesses and operations are not immune, they are generally insulated from the current environment. This is because our business focuses on providing essential products and services, which do not rely on cross-border movement of goods. They serve customers locally and generally pass through increased input costs contractually to the end consumer. As we have experienced in previous periods of stress, markets move for reasons that often don't reflect underlying fundamentals. This creates opportunities for experienced, well-capitalized investors to invest for value. Regardless of how the current administration's trade policies develops, the US remains a premier destination for investment globally. It is energy independent, boasts the largest GDP in the world, has the deepest and most liquid capital markets, and is a leader in technology and entrepreneurship. The administration's objectives focus on lower taxes, deregulation, and industrialization, which on balance are positive from a long-term investment perspective. We will all get to the other side of this. So basically what Brookfield is trying to convey here is that their businesses, while they're not immune to all of the global uncertainty that's going on right now, they are pretty well insulated. And this is because Brookfield doesn't do too much shipping of goods over borders. What they do is they'll go and set up shop in a country like India, and then they'll build local businesses or acquire local businesses within India and operate in that country. So while they are an international business, their businesses are actually pretty localized in the countries that they operate in. Bruce is also saying here that he believes that the world is going to get through these uncertain times and that the economy is going to continue to grow and that the United States remains a very investable place to, well, invest. So Brookfield is going to get through this. I think all investors are going to get through this. And this is what I do as well, is I just try to focus on the long term. And I don't think that 10 years out, the global economy is going to be completely wrecked. I think it's going to be larger than it is now. And I think that everything is going to be just fine when we zoom out a bit, which I think a lot of investors right now really do need to do, is just zoom out, calm down, get your emotions in check, and continue investing for the long term. This next screenshot is just the conclusion of the shareholder letter, where this says, over decades of operations, we have successfully navigated through many periods of uncertainty. We remain committed to our core competencies, investing in high-quality assets and businesses that compound strong cash returns on equity while emphasizing downside protection for the capital employed. Our primary objective continues to be generating increased cash flows on a per-share basis, thereby enhancing intrinsic value per share over the long term. If you have been watching my channel, then you know that per-share profits growing is what creates shareholder value for investors. And the number one focus of Brookfield Corporation is to increase its free cash flow on a per-share basis. And this is what the company has always done. It's why it's compounded massively over the past 20, 30 plus years. And it sounds like this is what the company is going to continue focusing on over the long term. And that's why I'm remaining a very happy shareholder. All right, let's head back over to Stock Unlock now. And currently we can see that Brookfield's market capitalization is $83.760 billion. Now, if we divide this by their trailing 12 months distributable earnings of $5.171 billion now, and this is their operating distributable earnings, by the way, then we get a price to distributable earnings of about 16.2. In my opinion, this is a very fair price to pay for a business that is growing by 27% over the past year. It has a great management team, and I believe that it is incredibly high quality. I think that it's probably one of the best asset managers in the entire world, and you can even go and compare them to Apollo or KKR. And when you look at Apollo and KKR, these companies trade for significantly higher price multiples. So a 16 price to DE, I personally think is quite undervalued. One, because it's a low multiple relative to the company's quality and its growth. And second, because this multiple is quite a bit lower than what its peers trade for in the same space. So I do think that there is an opportunity for multiple expansion of Brookfield Corporation over the long term, but I'm not going to bake that in to the DCF that we're about to do right here. So I ran a DCF on Brookfield Corporation today, and I put in the free cash flow that the business has generated over the past year now, which was that $5.171 billion. I also have the company growing its free cash flow by 20% annually, which is actually below what they are expecting to do over the next 5 years. They're projecting about 25% annual growth. So 20% growth is on the lower end of what the company is expecting to produce. I also have them buying back 1% of their shares on an annual basis over the next 5 years, which they're currently doing, and trading for a 16 price to distributable earnings, which is what they're currently trading for. So no multiple expansion over the next 5 years. And if Brookfield can do this and simply meet their targets and continue buying back shares, then the stock could compound by about 18% annually over the next 5 years from its current share price. Its fair value would also be about $83 per share. And I do think that this is probably around where the fair value of the business is. So when I take a look at these metrics right here, when I take a look at the price of the business, its quality, and its future outlook, I think that Brookfield stock is still quite cheap in the market. And I actually bought more shares in the market today after earnings. I am completely fine averaging up, buying near all-time highs, buying on a day where the stock is up 4%, because when I take a look at the price of this business relative to its fundamentals and its underlying value, I do think that it is still very undervalued and could continue to outperform the S&P 500 over the next 5 years and over the long term. So for those reasons, I'm not really focused on where the stock is trading right now. If it's up 25% over the past month, if it's near all-time highs, I really just don't care. I could care less. What I care about is what do I think the actual value of the business is? And right now, I think the value of the business is probably around $83 per share US. And as long as the stock remains below that, I'm probably going to continue just dollar cost averaging and buying more and more shares of Brookfield Corporation. So this stock has been a massive, massive winner in my portfolio, especially when I factor in the realized gains that I took on Brookfield Asset Management to put more into my BN shares. This is by far the largest gainer that I've ever had in my portfolios, and it's been a massive winner for me. But what's interesting is whenever I talk about Brookfield, I always get comments like, this is such a boring company. No one cares about Brookfield. Why are you talking about it? But I guess people just don't like making money. I find it crazy. Like, this is such a great business, in my opinion. It's extremely high quality. It has a great track record, great management, very aligned insiders that own 20% of the entire company. They're also exposed to so many different mega trends that I think are going to continue for decades to come. And to me, it just seems like this business is almost obviously going to grow. And I think the price is also extremely fair. So I don't know why people don't like when I talk about Brookfield so much, but it's the largest position in my portfolio. I strongly believe this one is going to continue to be a winner for me. So I'm going to continue sharing my analysis on it and let you guys know what I'm doing with my position. But I could talk about Brookfield all day, so I'm going to stop myself and wrap up the video there. So if you did enjoy the video, then please leave a like on it and let me know what you think about Brookfield down in the comment section below, and I'll do my best to respond to you guys and answer as many questions as I possibly can. Also, if you're new here and you want to stick around and see more investment content like this, then please consider subscribing to my channel, because that would be pretty awesome. And lastly, as always, thank you so much for tuning in. I truly do appreciate it, and I hope to see you again in my next video.